Assalamu alaikum everyone. This is Izan. Welcome to my first video here on YouTube. Um, so in today's video, we're going to be discussing how I personally trade DXY and other forex pairs. And when I say DXY, what I really mean by that is Euro USD, GBP USD, right? Basically all the USD pairs. अब इसमें आपके पास USD JPY भी आ जाता है, USD CHF भी आ जाता है. All the major pairs being traded against or with the US dollar is what I basically focus on. But my main focus is always on Euro USD and GBP USD, so Euro and Pound. So any further video that you watch on my YouTube channel is going to be based around this Euro Pound. That's all, right? So without further ado, let's actually get into the video. Now, the first thing that I want you guys to know is that the market always moves from a key level to a key level, alright? So that's something that you need to know. Now, what do I mean when I say the market moves from key level to a key level? So I've hid all my drawings here, so I'm just going to unhide them so you guys can see. अब यहाँ पर आप लोग देख सकते हैं कि प्राइस हमेशा एक की लेवल से की लेवल में जा रही है. बाय द वे दिस इज़ द डेली चार्ट. अब यहाँ पर आप लोग देख सकते हैं कि दिस इज़ an old swing high. Now this high was made back in August, so 1st of August, and then you can see price trades up all the way above this and then retraces lower. Now price goes back up again and इस हाई को दोबारा से एक दफ़ा स्वीप करती है before it comes back down lower. Now in this move, what do you see? You see that this is a key level, ठीक है? Price trades into this key level, then price retraces down. Where does price retrace into? This order block. So all of this is an order block. So price retraces into this order block, और यहाँ से price goes back up again towards this high. So you see how price goes from this key level into this key level, and from this key level price goes into this key level, and from here price किस key level में जाती है? Price keeps on trading down. The first key level that price comes to is this swing low made inside of this order block. So this is the first key level. So after price achieves this key level, you can see कि यहाँ पर आपके पास एक fair value gap बन जाता है on the daily chart. So this is the second key level. ठीक है, इसके बाद price इस key level में जाती है. From this key level, price moves down lower. यहाँ पर अगला key level क्या है? The next sensible key level is going to be this swing low. So you can see price achieves that as well. Then उसके बाद the next key level is going to be this one. Price also comes down into this. Price goes up above and price trades into this key level. So price creates this swing high and then it sweeps that out again. So this also counts as a key level. And then price goes back down again. ये जो लो बनाया था, it sweeps that out एक और दफ़ा, and यहाँ से price goes up again. ठीक है, so this is also a key level. And now what key level price is basically moving towards is this high right here. ठीक है, इसके बीच में you can also see कि ये भी एक key level था, ठीक है, which price did take out, but then it decided to continue higher once again towards this key level, because this key level is much more, I would say, preferred by the market. Alright, with that being done, now the second step. What is the second step? Let me just remove all of these drawings so it's easy for us to understand what's going on. There we go. ठीक है, अब what is going to be the second step, right? So I don't know if you guys know about the MMXM models. If you guys don't, that's completely fine. I will make a separate video on what MMXM is as well. But for now, I really recommend you go ahead and learn what the MMXM model is before we move further into the video. Right. So what you're basically going to do is, once price achieves your key level. So for example, I am looking at this, right? So what I'm basically, here's where price is trading. अब यहाँ पर मैं क्या करूँगा, I will look at my next key level, right? So अगर प्राइस इसको स्वीप करके नीचे आ रही है, आई वुडेंट से कि दिस फेयर वैल्यू गैप इज गोइंग टू बी माय नेक्स्ट की लेवल. व्हाई? बिकॉज प्राइस इसको स्वीप करके नीचे आ रही है. So this fair value gap is going to be completely obsolete. Why is this going to be obsolete? Is because again market bias has shifted downwards. अगर मार्केट यहाँ से ऊपर ट्रेड करती एंड देन इस फेयर वैल्यू गैप के अंदर आती, देन आई वुड हैव सेड ओके मार्केट इस फेयर वैल्यू गैप से दोबारा ऊपर जा सकती है. बट इन दिस केस प्राइस ने इसको स्वीप किया, इट डिड नॉट क्लोज अबव एंड प्राइस एंडेड अप कमिंग डाउनवर्ड. ठीक है. एनीवेज, सो दिस इज गोइंग टू बी आवर नेक्स्ट सेंसिबल draw on liquidity for price, right? So price ने आपका ये high sweep किया, now it's coming back downward, so this is going to be the next sensible I would say swing point or draw on liquidity or key level. ठीक है, जैसे I just discussed कि market always moves from key level to key level, so you can see this is the next key level that market is going to favor, not this fair value gap, definitely not this fair value gap. Anyways, now what I'm going to do is I'm going to drop down into the 4-hour or the 1-hour chart, right? So let's start from the 4-hour. Now on the 4-hour chart, there are some things you're going to do. So there are two key things that you need. You need to identify an MMXM model. Now in this case, it's going to be an MMXM sell model because we're selling into our key level. The next thing that you need is a dealing range. Now, I'm not going to go very deep into the MMXM stuff, but into the key level, into the dealing range, I am going to guide you guys a little more about that. So, what is a dealing range? Now, a dealing range basically is the first leg of expansion that you get after price hits a key level, after price reverses. So यहाँ पर you can see price takes this high out, so price sweeps this high and then it starts to consolidate. Now we are not going to expect any short setup to form until price drops out of this consolidation pattern. Why? Is because we know that price did sweep that, but there is still a chance that price could continue to go up higher. So what we're going to do is we're going to wait for a new dealing range to form. Now what is a dealing range? मैंने अभी आपको बताया, a dealing range is the first leg of expansion that you get after a reversal. Now यहाँ पर you can definitely see something like that happening. So you can see you don't have any expansion right here. यहाँ पर आपके पास ऊपर ये high sweep हो रहा है, you do not have any sort of expansion. The expansion that you do get is right here. Okay? So you get this expansion. Now once you get this expansion, it does not mean that you're going to trade this expansion. What you're going to do here though is you're going to wait for a retracement now. Now that you know that market is in a sell model, it's confirmed that market is in a sell model, and it is confirmed that market wants to expand lower again. Obviously it will need to retrace first, right? So here's what's going to happen. Market is going to retrace into some sort of key level, right? So what key level do you see here? Now the only sensible key level I see is this fair value gap right here on the 4-hour chart. Now to make things even better, I can drop down into the 1-hour chart. Now when I go into the 1-hour chart, I can see that there is a swing high made exactly at that 4-hour fair value gap. So I can mark this out as well. There we go. Right, I can even just remove this fair value gap. Right, so you can see that this is our narrative that has formed there. Now why am I not using these swing points as narrative? Well, it makes perfect sense that you have 3 swing points combined, right? So I'm always going to use the one that is at the highest, right? In usual cases, it should take all of these highs out. In some rare cases, it would only take a few of these out, but I would always expect all of these to be taken out. And also the fact that this was a 4-hour fair value gap, I would expect this 4-hour fair value gap to get tapped. Another thing, when this occurred, it occurred during news, right? So you had unemployment claims. So what unemployment claims basically did is it pushed price higher into this high, and then it reversed sharply to the downside. Now, another thing that I would like to tell you guys is that once you enter a sell model, so let's say that you do have entered a sell model, once price gave you this first bearish dealing line, so for this first leg of expansion lower that price gave you, you are now officially in a sell model. You are not going to look for longs no matter what, right? You are only going to bias shorts. No matter how good longs look, you're not going to take those longs. The reason being is that probabilities of a long is much less now. Yeah, you could get a counter trade in, but that's not what we want. We need to catch the real move, and the entire purpose of having of seeing the market from an MMXM perspective is to catch that entire move towards your draw, and those little narratives that form in between, right? So what do you see here? You see a narrative that forms within that MMXM sell model. Price fulfills that narrative and moves lower. What do you see afterwards? You see that price creates this another swing point. It creates this another swing high. If I go into the 4-hour chart, you can see this swing point that price creates. Then market comes back up again, sweeps that out, and then continues lower. So what do you see here? Obviously, you see another narrative being fulfilled. Now, in my personal opinion, what I like to do, because this is obviously my own personal trading model, what I like to do in cases like these is, in a sell model, I would always and always look for swing points as narratives rather than fair value gaps or order blocks as narratives. Now, the reason for this being is that if you focus on this move, you can definitely see that this was a fair value gap that price was trading lower from, right? But I mean, if you took this entry, that would have been perfectly fine, because this entry actually formed during Thursday's London session. So 27th November's London session, this entry formed. But the thing about this is that price could always come up above and run this high, because this is a weak high. Now, what a weak high basically is it's an engineered high, and it's a high that hasn't swept out any other high, right? So you call that as an engineered or a weak high. So what price basically ends up doing is it sweeps these highs out before it moves down lower, right? And these highs are basically the highs made inside fair value gaps and inside order blocks and all those other PD arrays or key levels. So as narratives, I would always prioritize swing points over these fair value gaps, right? So I would always recommend going for an entry which forms like this or this. Now here you can see it is technically a fair value gap on the 4-hour chart, but if I drop down to the 1 hour, you can see it's not really a fair value gap. I mean, it is a fair value gap, but on the 1 hour it is a swing point as well, and here you can see it's a swing point on the 1 hour as well, right? So this is very important. Now you can see price then sells off from there again, and price creates an equal low. Now you already had an equal low, price creates another equal low. Now this was peak manipulation. This was a lot of manipulation right here, right? So what price basically ended up doing is it completely edged your draw, created an equal low, and price reversed up high from there. Now price reversed where? Price reversed towards this high, and price also tagged into this fair value gap. Now you can see I am more biased and more focused towards this swing point rather than that fair value gap, by what I just told you, that I always recommend going for swing points rather than anything else. You can also see this is an order block as well. Anyways, now obviously you would drop down into your respective time frames and you would frame an entry off of this. Now let's actually go down into the lower time frames and see how we could have entered off of these moves right here. So I like to I have to use and implement my entry models on the 15-minute chart. That makes the most sense to me. So you can see this was going to be our first trade. So news comes in, price moves up higher, then it comes back down lower. Now my most favorite entry model is always going to be the inversion fair value gap. So you can see this was a fair value gap which got inversed. Now what I'm going to do, you can see you have two overlapping fair value gaps, so this one and this one. So I'm just going to consider both of these all together, right? So I'm just going to consider both of this as one big fair value gap. Now you can see price closes below, that's where I'm going to enter. So as soon as price closes below, and my stop's going to go at this protected high. Now like I just told you, there are weak highs that are formed inside of fair value gaps, and these highs are basically the highs that haven't been swept out by that hasn't swept out any other high or low. It can be a weak low as well, and these highs and lows tend to get swept out later on, right? So I would always recommend putting your stop at a strong swing high, and a strong swing high is basically the opposite of a weak one. A strong swing high is a swing high or a swing low that has indeed swept out another swing point, right? Now what I'm going to do, I'm going to target my draw here. So you can see my draw ends up hitting, and this is a 4:1 reward, right? So I'm just going to remove this, right? So it's a 4.05 reward, right? Now let's actually move on towards our next trade, right? You could also just take a 2:1 reward or 3:1 reward on these trades, but I'm going to show you an entire trade that you could take on this towards your draw on liquidity. Now right here, how could you have taken this trade? Okay, so what I'm going to do here is, let me just bring this up. Let's actually see. Alright, now you can see in this move right here, now we want to be trading within some sort of kill zone. Now you can see this is the LOKZ, which is basically the London kill zone. Now you can see the price creates the high of the day. Now this is the high of the day profile, this is the high of the day market profile, and this high of the day is being created during the London session. I will be making another video on these market profiles, so stay tuned for that as well. So what you see here is price creates the high of the day during the London session, right? And then and obviously you were expecting this to happen just because this was a 4-hour weak high which was created and price swept that out. So you were expecting this, something like this, to occur beforehand. And how I would like to execute on this is, again, I could use a change in state, or I could use an inversion fair value gap. Now you can see you have two fair value gaps here. So your first fair value gap is this one, quite small, and this is your other fair value gap. Now I would always recommend choosing this fair value gap over the other, and the reason for this is going to be very, very simple, and it's that this is the last leg, this is the final leg before price is reversing. This inversion does not is not better than this one, and the reason being is कि price यहाँ पर इसको यूज़ करके ऊपर भी जा सकती है और नीचे आके इसको यूज़ करके ऊपर जा सकती है, ठीक है? अगर ये इन्वर्स हो भी जाता है, price could still use this to go up. So I need at least the second last leg to have a fair value gap which can get inversed. So you can see the fair value gap gets inversed right here. I enter and my stop is going to be at this strong high, which I don't expect will be taken out. So you could target 2R, you could target 3R, you could target 4R, you could target 5R, you could target even the draw, which is going to be 5.4R, which again ends up hitting right here. So 5.4. Alright, now the next narrative that forms for us is going to be right here. Okay, so you can see price creates these equal lows, which I just told you about earlier. You can see price goes up here, and यहाँ पर price starts to consolidate for quite a while. Now you do get unemployment claims, or I think this was CPI. Yeah, you do get CPI here. So it's a Tuesday, so 2nd December Tuesday, you get CPI. And what market basically ends up doing is it goes up above, and it takes all of these highs out. So you can see it sweeps this high out, and then it sweeps it out again, so twice, and then market ends up reversing. Now in this situation, what you could have done to take an entry is, of course, use this inversion fair value gap. Right, you see this inversion fair value gap? I always like to execute on these. Gives me the best confirmations. Right, you see we do get very close to our SL. Now in a lot of cases you would have been taken out by the spread on this. So this is a 3:1 by the way. You could have been taken out by the spread in a case like this. That's just unlucky. If you do, I would recommend entering the trade with half risk. So for example, you risked 1% on this and you get taken out by just a pip. You can enter again, for example, off of this change in state, you see, or actually this would be your change in state. And the reason for that being is that this high did not really take out this high, so this is going to remain the original change in state. You can see price closes below. As soon as it does, you enter, stop at that high once again, but this time with half risk, and you go 2.25 RR, and there you go. That's how you catch an MMXM sell model or an MMXM buy model, and that's how you make the most out of everything. Now ये जो मैंने आपको एक example दिखाई है, this was the best example that you could possibly get. This was back in the starting of December. I made a lot of profits on this, but you do not always get something so clear and so good. But this is just to give you a general idea of how the markets work. I showed you everything in one sell model. Now if you try to see all of this, you can see price does the same thing, takes this low out, starts to consolidate, creates its first dealing range, comes back down, gives you your first entry, then your second entry right here, your third, your fourth, your fifth, your sixth, your seventh. You can see a lot of entries price gives you, right? So a lot of opportunities open up once you start seeing how price goes from a key level to a key level, and how price moves in MMXM curves, so an MMXM buy curve and an MMXM sell curve. So I really recommend looking into MMXM, and yeah, that's going to be it for today's video. Thank you so much for watching. If you found it useful, and if it provided some sort of value for you, make sure to subscribe. It helps me grow, and yeah, make sure to like the video and share with your friends as well. And let's catch you in the next one. Thank you so much.